May profits be upon you. Welcome to another weekly market forecast. We're looking at the NASDAQ futures, the NASDAQ 100. Okay. Um, let's take a look at the monthly. And what you can see is that, it's been heading up for quite a bit. All right. And we had this one bearish month out of how many? 7 months. And then November came and it turned out to be a bearish month. But look at the bullish price action in that bearish month. You can see the wick was pretty strong. All right, here's the deal. When we look at these candles, we can see with, with candlestick logic. All right, when the market closes above the previous high, we can kind of expect that this high will be the target of the next candle. Well, it reached for it, but it didn't quite make it in November and turned bearish. The deal is it took out that low, all right? And then you saw the bulls come back into the market and push that thing way up. That's a very large wick. And you know what I like to do with large wicks? I like to measure them thusly. I don't know how that sounded, but you know what I mean. All right. Now, what am I looking for? I'm going to divide it up into quads. All right. 1, 2, 3, 4. 4 quads. You see how what you expect is the following candle should respect the 50% of the candlestick range. All right. And you kind of figure that we got strong order flow in one direction or the other when it goes past that 50%. You can start when it goes past that 50%, you say, well, we might be heading down. But when it stays up in the first 25%, you say, oh, we got strong bullish order flow. You're expecting this move to continue on this side, with the new candle. You understand? And that what we have here is the first 25% is what the new candle traded in, the new monthly candle traded in and pushed higher. We had it open, we pushed down, and then you see it looks like we're on our way up. And there's not a whole lot up here to shade like a bearish fair value gap or something that says we're going to run into a lot of resistance. Now, if we go down to the weekly, what do we see? We see where the market came down and pushed down. And you see the recovery is what I'm getting at, that pushed past the past 2 weeks, right? With a close. That's a bullish marker for me. This is the market makers buy model here. This is where we see a smart money reversal. All right. If we go down to the lower time frame, you can see it on the daily. It's actually clearer on the 12-hour. If you take a look at it, you can see we took out that low. That is the liquidity sweep, the raid on sell side liquidity. Right. And that's where you start to look for a new model to start the other side of the market maker model. Whether it's we've been bearish, now we start to look for a bullish move once we see the smart money reversal. All right. And you can see that there was a fair value gap between here and here, a bearish one that formed after with that raid of liquidity here. And then you see the market pushing back up into that fair value gap and disrespecting it here. This is an excellent area to look for buys because you're looking at the 50% of the fair value gap the fair value gap that formed here. You look for 50% of it to be retested on the way out, all right, as the market turns from bearish to bullish. And where did the market stab into? Right around the 50% of this fair value gap. All right. It has become, once it's disrespected, it has become an inverted fair value gap. The market uses it instead of using it for resistance, it turns into support. And you see the market has been bullish since. All right. And you can call this a change in the state of delivery once it breaks these highs. All right. You can. Yes, you can. For me, the fact that it displaced here, leaving a bullish fair value gap, stabbed in that and pushed up is enough for me. But all those other confluences with the inverted fair value gap, those are strong support. That's strong support for higher prices. That's all that is. Okay. If we go down, go back to the daily. All right, you can see there was a volume imbalance here that the market came down and pushed into and ultimately ran through. All right, but look what happened when it came back through to test it again, forced it down. That's an interesting area for me because look where we're at right now. If the market stays above this volume imbalance, I'm looking for the market to support it as support, to act as support and support higher prices to the swing high. I am. This was a hard road to travel, and the market forced its way up through bearish fair value gaps, this volume imbalance, another bearish fair value gap here. It used it, and then ran right through it on the way back up on the other side. I'm looking at the market continuing higher to this buy side liquidity high here. This is a swing high, the all-time high, and I think that's what we're going to be reaching for over the next few days, next several days. Okay, especially with a weakened U.S. dollar. So bear that in mind. I don't see any bullish fair value gaps here, or bearish ones. Sorry, bearish ones here. I don't see any displacements down. Yes, there are some low hanging uh, uh, lows there, liquidity lows. But the fact is, we swept that low. We swept into this bullish fair value gap, and the markets respected it and pushed price higher. And we've been kind of moving sideways, but moving up anyway. Just incrementally up. Yeah, we swept this high, but there is this high that remains, and I'm thinking that we're going to be hitting that. We're going to be hitting that as a secondary target because it's so close, and then we're going to go up and smash that swing high. I think that's what's going to happen over the next several days. Yeah. Let me know if you agree or disagree. But I'm always happy to read your comments. Hey, I already put out a couple of videos today for New Zealand dollar USD, for the pound USD, and Euro USD, and the US dollar. You want to go check those, all right, before you do anything this week, all right? And I hope you like the video, and I'll see you in the next one. May profits be upon you.